The morning session is more mindset and psychology, and we actually went over the complete plan of how to take your account from $200 to over $10,000 in 5 months. We went step by step through that. It's very, very exciting. A lot of people didn't realize that's how we could do it. And it was a step-by-step plan to take $200 to just over 10,000. I think it's $10,900. So I'll re-record that and get that out to you. I strongly urge you watch that because that's the basis for what we're doing. This evening call is based on the actual trading. So we're going to be looking at trading. We're actually going to be looking at the markets, and we're going to be answering questions. And if there's any markets that you're looking at that I can't look at, shout them out to me. You can unmute yourself. You can put them in the chat, whatever you want to do. And we'll take a look at those setups. I'm not going to be saying, take this trade, take that trade, but I'm going to show you what a good entry in those might be and what it might look like. So as always, though, your number one resource for any of this is the go lives. So make sure you're on. Hi, Emma. Make sure you're on. Make sure you do watch the go lives. I'm on at least 4 go lives a week, every week, and have been for the last 3 years. I watch at least 2 or maybe 3 of them live, and then I'll watch maybe 1 or 2 recorded. And very often I'm only watching them recorded because they overlap in time and I can't watch them both live at the same time. So I'm constantly learning, and it's something that you should really get used to, is that constant learning pattern, because that's what's going to elevate you to achieve what you want to achieve. There's a lot of good traders in the academy, a lot of good traders that I look up to, not including the educators, are obviously fantastic. And it's such an unsung resource, the go lives and the educators. And of course, also, Swipe Coin and Blaze and Swipe Options and all the apps that we use. People are calling out trades on those all the time. You can set up notifications on Impulse. We went over that last week. If you don't know how to do that, check out the recording from last week. But I'm going to go over a few other things that I do with the charts as well. So I'm going to share my screen with you now, and we will run right into it. So here is Impulse, and that is what I put everybody on. A lot of people, as you know, I've got Catherine, who only started 3 months ago, and she is already doing better than I am in terms of trading. I'm in the Masters Club. I've hit Masters Club 52 weeks running, 54 weeks running actually now, every single week. You have to send your trading log in. Can't be altered or anything. They check your trading log to make sure you're doing what you're meant to be doing. You have to win a minimum of 7 trades out of 10. And I've done that consistently every week for 54 weeks. So make sure you're muted, Matrix, because we're getting some feedback. So let's go right into it. We've got gold up right now, but I want to show you a couple of things before we go into the charts. We've already seen a nice entry right here on gold, as you can see. Let's have a look at this and count it down. There's your crossover. We saw the blue line here, change to the red line right here. So that's one of the things that is one of the indicators. We saw these blue arrows here. So again, this is another sign. You've got blue arrows going up here. And don't forget, there's 50 different items go into each single arrow here. So these arrows are not to be ignored. we see blue arrows, blue arrows, blue arrows, a couple of red, but blue, 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 blue. And then we have a red arrow there. That is another indication that we got a trade setting up. We did see right here that we went down through the red line. So don't forget, when we're in red, we're looking for sells. When we're in blue, we're looking for buys. So we got a red arrow, means sell. This trend line turns red, means sell. This broke down through the red, means sell. And right here, I know everybody knows this, but it doesn't hurt to reiterate it over and over again. And the line crossed right here from blue to red. So you got 1, 2, 3, 4, 5 indicators. And the 6th indicator, obviously right here, is the blue crosses the red on a downward motion. And the 7th indicator right here is Bollinger Bands expanding right here. So this is a classic example. We say that we need 5 indicators to take a trade, and here we have 7, all telling us that we're going in for a sell. It can't be more clearer than that. This often comes a couple of candles before. I'm a scalper, so I'm on the 1 minute time frame. So 2 minutes before, we've got this breakdown through the red saying, hey, John, watch out. We're getting ready for a sell. Couple of candles later, all the others lined up at exactly the same time. So right on this candle here, the blue cross the red, go into sell. Right on this candle here, we drop from above the blue and red line right through the blue and the red line. I love to see that. A candle that goes through both the blue and the red is a very strong movement. It went right through the white and went straight into the gray cloud area. The gray cloud area is where we want to see our trades. Okay. And so in this instance, we had 7 indicators saying this is our entry. So we would have got in right here. And there's no exit. We stay in the green, we stay in the gray zone all the way down. The arrows are all red all the way down. We're in the gray zone all the way down. We might have got out on this blue candle here. That was a slight reversal. But we were still in the gray here. We were still down here. We were still well in the red down here. So probably you might have got out more like somewhere around here, either on this first section here or the second section here, you would have got out. And those are the pips you would have taken on that trade. It was a 7-pointer trade, 7 indicators saying get in, nothing to say get out until we went maybe into the white area there. The blue is getting closer to the red, so there's a sign that there might be some change going on. We did pop up through the blue right here, which I don't like to see. So that's a signal. It might be time to get out. However, we did pop back down through the red here. So right here was our re-entry, somewhere in these candles here. And then we would have taken it down and we would be down here again. So that would have been a second trade. And that was in the basis of 638 to 1908. That's 30 minutes. You would have had 2 trades, depending how much you would have put on that. You would have made somewhere around, depending on the size of your lot size, you probably would have made between either $80 or $800 in 30 minutes. That's how you trade gold. Does anyone have any questions about that? No? Okay. So let me get out of that. Let me show you a few tips here. One of the things a lot of people struggle with is, thank you, Regina. Thank you, thank you, thank you. Oh, Emma, you like gold, eh? Very good. Gold moves really well, and it's moving really well right now. A lot of people struggle with stop losses. and you can follow the instructions that Brandon Boyd and Josh Lee gives you about where you put your stop losses. But I use another tool. You can add it onto Impulse quite easily. You go up here to the indicators and strategies. See this area here, the F and the little X on Impulse. You click on that, and then I would go down to if you put in PSAR, actually puts in parabolic. And the first one there, I have it starred, is a parabolic SAR. Parabolic SAR. The SAR stands for stop and reverse. So when we add that to the indicator, you'll see it come up. It'll actually be in small blue. Hold on, I got my, let's get out of that. There'll actually be small blue indicators here. I like to click on them. I like to have visual order bring to the front so you can see them at all times. And then I like to make them bigger. So I'll right click on it. I'll go to, hold on, let me get it. I'll go to settings right here. I will change this to black. And I will change this. I will leave that on the cross. And the inputs, you leave exactly the same here. Visibility the same. And on this, I would just go up from the lowest thinness, because here, as you can see, you can't really see them. So the second one here, okay? And then click OK. And these are PSARs. Now, what they are, stop and reverses. What that means is when they're above your candles, you're looking for sells. And when they reverse, you're looking for buys. Now, obviously, you still got to take into account your other indicators. This line has got to be red for a sell, blue for a buy. But notwithstanding that, these PSARs will give you a clear indication of when the market is turning around. And you can see here, we were in a slight uptrend all the way. See these PSARs, they're very close because the market wasn't really open then. There was no volume. And then here, they reverse. They stop there and they reverse here. This means a reverse is coming. And here we see it go all the way down. We also see the reverse here. Obviously here, we've got a downward trend on the indicator here, crossing over from blue to red. And we are down in the bottom area here. But this will give you another indication that we're reversing and going into sell position. Again, the last one is there. And the next one here, it's reversed. And now we're going up. It reverses, now we're going down. It reverses, now we're going up. Reverses, now we're going down. It's a very, very nice visual of where the market's going on top of the normal impulse indicators. Excuse me. The other thing I like about this is you can use these PSARs as your stop loss. So if you got into a trade right on this candle here, so I'm going to put this, you were looking at right on that candle there, okay? That's where the entry is for the reasons that we've explained earlier. The crossover of the blue and the red, we dropped through, the trend line changed from blue to red, and we're down, Bollinger Bands expanding, etc. We went all through that. But here's where you would set your stop loss, is where the PSAR is, right here. And then you can follow, you can trail your stop loss all the way down using the PSARs as your stop loss area. And you would go all the way down. Guess what? You got a reversal here. At the very least, you would be out at this candle here. Preferably, you would have been out on that candle, ideally on that candle. But if you missed all those, that reversal there, when the PSAR dropped below on that candle there, you would have been out. That's why I like PSAR. So you can use that. It's easy to add. Go to FX, type in parabolic, add it on, make the changes that I just suggested to you. So your stop loss, if you got in here, you would go into your short position here. Hold on. Okay, Tony's in. You would enter your short position here. Here's where your entry would be. Your stop loss would then be on the PSAR right there. And because we're looking at a risk-reward ratio of at least 2, preferably 3, even if you went to 4, which is right about there, and decided that a 1-to-4 risk-reward ratio was exactly what you were looking for, you could get out right there. Okay, can everyone see that? Let me move that out of the way a little bit so you can see that clearly. Okay, we got a risk-reward ratio of 4. Our stop loss is on the PSAR there. We don't have to do any calculations or do anything. Very, very quick. Our entry was right at the crossover there. If we wanted a 1-to-4 ratio, we could have got out there anyway and say, hey, you know what? I've risked $100. I just made $400. And that was in 1, 2, 3, 4, 5, 6 minutes. You would have made $400 if you risked $100. If you risked $10, you would have made $40 in just a few minutes. I don't know what hourly rate you're on right now, but 1, 2, 3, 4, 5, 6 of those means you're on $240 an hour with just that one trade. Okay, so I love the PSARs for that early entry. I love that. I love that. If you want to use that as a template moving forward, you can save that layout. You just go to load layout on the hold on, I have to. Let's go across here. You go to save here. You go to this down arrow here. It says manage layouts. You would click on there. It would say save layout. And then you would name it. In this case, you could just name it PSAR, P-S-A-R, and it would save layout. Next time you come to open it, you would go to here and you would hit load layout and click on your PSAR one, and it would automatically be there with all your settings. So you don't have to set this up each and every time. You can set this up once, save the layout up here, and every time you come up, if you like this, I love it. If you like it, you can save it, and then it's there forever. Very, very clear to show when it's reversing. Very, very clear to show you where your stop loss is going to be. And whatever risk reward you're after, let's say 1-to-4, you would have been out with a very nice profit in 6 minutes. If you stayed in, you would still be out on that reversal, which would have taken a little bit longer. You wouldn't have actually made that much more money because of this little pullback here, but nonetheless, you would have made a little bit more money if you waited for this candle to show up and this to cut up through the blue. That's one of your exit indicators, cutting up through the blue. Because when we're in sell mode, we want to see it cutting down through the red. Buys are up through the blue, sells are down through the red. Okay? So let's get back up there. Now, for people who trade gold, I guess Emma trades gold. I know Tony trades gold. I know there's some other people that trade gold. One thing that I like to trade is, and Tony likes to trade when we're trading gold, is imbalances. And how an imbalance works, I'll show you on Aurus because it's a little clearer to see here, but I'll show you it anyway. This is again one of our scanners. You can do this on anything, but this is just going to be clearer because I don't have everything else on there. But when we look at the imbalance, I like to use the, you can use the 15-minute or you can use the 5-minute. And what we're looking at is imbalance is when candles don't close either side of another candle. What does that mean in effect? See this candle here? This candle closed right here. And this candle, there's a gap between the top of this candle and the bottom of this candle. That is an imbalance between the buy orders and the sell orders. And so what happens is in that area, that means there's unfilled orders. And so how I like to draw those up is I draw a rectangle like this, starting at the bottom of that candle and the top of that candle. That is an imbalance area that sooner or later has got to be filled. Okay, and I leave those on the charts. Let's go a little bit closer here. And I'll show you some other imbalances here. Here is an imbalance right here. So I would draw my imbalance from the top of that candle there to the bottom of that candle there. And I would let that run all the way over to, and you can see clearly here, we got the imbalance there from the bottom of that candle to, from the top of that candle, sorry, to the bottom of that candle, including the wicks. You've got to use the wicks. That means that gap in between there, there's some orders sitting there that haven't been filled. Excuse me. So what you're looking at is that as an area, and you can see right here that it came down and it filled those pending orders. And we can use these to great effect, because that gives us a heads up. If we're looking at this, we know it's going to come down. I'll show you another one here. There was a pending order from the top of this wick here to this wick here. And if you follow that across, you will see clearly we filled that imbalance right there. Okay, here's another imbalance right here from the bottom of this wick down to that wick. Go it across. You can see quite clearly we filled that imbalance there. So you see how powerful that is. It almost invariably will fill those imbalances, because those imbalances contain orders, buy or sell orders, that have not been fulfilled yet. So eventually the market has to be balanced, and eventually those markets will be filled. Sometimes they take a short period of time, sometimes a long period of time. Here's another one right here to here. In a very short period of time, those orders were filled. So when you see that and it bounces off this line here, you would know that eventually those orders are going to be filled. When we're looking at current time frames, you can see we've got a couple of them right here. So we got one here from the top of that to the bottom of that, right there. We have another one actually from the bottom of that candle to the top of that candle right there. We've got another one from the bottom of that candle to the top of that candle right there. And so what we can expect with this, in some certainty, again, we've hit a support level here. We haven't gone through it. If it breaks down here, then all this is a moot point. But what we're going to be expecting is we're going to be expecting something like this, something like this, something like this, and maybe even up to here before it shows a reversal. Okay, if you know where these imbalances are, and this movement here, we've got to wait for this movement. Now, don't forget, this is the 5 minutes. I trade on the 1 minute. So when we go down to the 1 minute, let's have a look what we're looking at here. If this breaks down here, obviously all this is void. But if it breaks up through this line here, we're going to be expecting it to look something like this. And so there's one, take profit 1, take profit 2, take profit 3. Now, one thing to look at when you get these imbalances, it's really the center line of those imbalances is what you should be aiming at. Doesn't always get to the center line. Sometimes it blows through the center line. But as a matter of prudence, I aim for the center of those imbalances, not the top or the bottom of them. Sometimes you're unlucky and it will just come into the bottom and then go away, and it might not feel less imbalanced for a little while longer. But you want to be aiming for the center line there. When you're on impulse, it's exactly the same thing. You probably want to take the arrows off so you can see it clearly. You want to go to the 5 minute. And again, your imbalances are going to be clearly shown. Here they are right here, exactly the same place. Go to your rectangle. Here's one right here. There's the first one we saw. Here's one right here. Here's the second one that we saw. Down to here. Here's another one that we saw. So you can do it all on your impulse charts. There's not an issue here. Okay. And there they are. There's your imbalances right there. That's on the 5 minute. You go back to the 1 minute, all transfers over. As long as this doesn't drop down. Now look, the PSARs are showing us that it's stopped going up and it is reversing and going back. It's actually not reversing. It's just going back on trend because look, here's our trend line. So we've actually got to narrow this gap. This blue's got to cross the red here. This has got to go up through the blue, which is starting to do. So that might be our first indicator there that we're going to go back into blue territory here. But we'll be looking at it. If that does do that, we could be targeting these areas as possible TPs. Okay. Everybody happy with that?
Yeah, good stuff, John.
Thank you, Tony.
Yeah.
And these again, you know, we've got, you know, right here, we've got entry was here. We had a re-entry here, continuation. We would have got out here. So we probably would have got out somewhere in here. We would have re-entered probably around here for a buy, for a sell, sorry. Probably right now with this flip here, this could be, it's very weak. These candles are not indicating any strength here. We are coming up through the blue right now. We do have a morning star candle right here, which could indicate a reversal, and we could be looking to get up. So this is a bit of a risky move right now. So we'll look at that. But again, it could set up for a nice continuation rundown. Okay, any questions on any of that?
Yes, I have a question.
Yeah.
All this is for us to predict what is going to happen. Like in the big rectangle that you just have, that red wick there, that it doesn't have the wick on the top, and then you went to the middle long one on the right there going down.
Yeah. This one here?
Uh-huh.
Yeah.
But you didn't go to there. It just happened to be that the next arrow, the next how do you call it, red one, the wick is next to the next one red to that one.
This one?
To the right, not
this
to the
one?
right. Yes, you went to that wick over there.
No, I was, yeah, I was just doing it very quickly. You would have gone to the wick on here. I'm sorry.
Ah, okay. I was wondering about that.
Yeah. So your, this is a better example right here. I'll draw it clearly. So an imbalance, you have a center candle and you measure it from the candle in front of it and the candle behind it. Candle behind it, the candle in front of it. So this one closed here, you would measure it from there. You don't count this one to the top of the wick there. So your rectangle would look like that.
Okay.
Okay.
All right. Okay. I thought that was, that was my confusion, that I saw that little one.
Yeah, I'm sorry. Yeah.
But that's fine. Thank you.
You're welcome. And then, you know, from that one, there is another one immediately under it as well. So sometimes these have two imbalances. Don't forget, I'm on the 1 minute candle here. So I don't do my imbalances on the 1 minute. So don't forget that could also add it to your confusion there, because I originally do them on the 5 minute. So in this case, Maria, that's the candle before, and that's the candle after. So when I drew this on the 5 minute chart, I'll show it to you here. Okay, see, it went from the wick there to the bottom of the wick there, correct?
Yes.
Okay, now look, when I go to the 1 minute, this is what your confusion was. Now I've gone across several candles here.
Yeah, I see that.
See what? But we're marking on the 5 minute. You don't want to mark on the 1 minute.
Okay, I got it.
So you mark on the 5 minute, go back to the 1 minute. You can even go to the 15 minute and mark it up there and then trade on the 5 or the 1. It depends what kind of trader you are. I'm a scalper, so I'm trading. My entries are always on the 1 minute. But I mark my, on higher time frames, things like this, I will mark up on the 5 minute. And here you see, we've got, it actually covers several candles. But when we go back to the 5 minute, you can see clearly it just covers that candle. The candle before is there, and the candle behind is right there. That
So when you
stays
go
in
to the-
position.
So when you go to the 1 minute to trade, you would trade where it's in the halfway of that long candle?
Correct. Well, no,
Okay.
you would trade in the middle of this box.
Okay.
So the center
that's what I
line,
mean.
yeah, the
Mhm.
center line here would be, you know, roughly there.
Okay.
That's what I'm looking at. Okay. And when we
Yes.
change to the 1 minute, you'll see the center line is right there. Even though this has now covered several candles, because we marked it up on the 5 minute, this is valid.
Mhm.
And so we'd be looking at this. If this reverses, which it might do, if that PSAR flips below, this blue crosses the red, we might see that uptrend start going up towards this. Okay.
All right.
And so that's why we're looking at other things have to happen. It's not the be all and end all. It just means that this is an area of interest to us that we might be looking to get to.
Okay.
Okay. Now, some of this is a little bit more advanced than the basic. So, you know, I do stress that you would really want to make sure that you are familiar with the basics of impulse. There's a 4-minute basic video that's out there. There's a 20-minute advanced video that's out there. If you watch the 4-minute and the 20-minute video, you know impulse. That's all you need to do to trade impulse. If you don't have those videos, get back with your upline, get back with the person that introduced you to the academy, or message me directly and I'll send you those 2 videos. And again, as I said at the beginning of the class here today, it's essential that you're learning from Brandon Boyd and Josh Lee on a continuous basis. They also have, if you go in their favorite sessions, there is also a boot camp 1, 2, 3, and 4 that I highly recommend that you go to and go through the boot camp 1, 2, 3, and 4. A lot of this will make sense for you, but some of the stuff that I'm showing you here, they don't cover. So they're not going to tell you about PSARs. I'm not sure they tell you about imbalances. I really only use that on gold predominantly, not so much the other instruments. Okay. And we're still waiting for this to set up. So, you know, right here, before the session started, that was actually our entry on gold there. We could have got a re-entry right when the session started here. I wasn't really looking at it for entries. These aren't really that clear at the moment for entries, especially the PSARs are flipped. PSAR stands for parabolic, stop, and reverse. So we stopped and we reversed. And so this could indicate that we're going back up, or it might just be a pullback. We don't know at this stage. The blue is getting closer to the red. So we could anticipate that when the blue crosses the red, we are going to have a little bit of an uptick. For that to happen, this red line has got to come all the way down to the blue, go underneath it and come back up through the blue. So when it does that, we would want to see this come down here, come below that and up through the blue. When it goes up through the blue, if that blue has crossed the red, even though it's probably still counter trend, you could probably take a little buy on that in that scenario. That's a little bit advanced. So best case scenario, always, always, always only trade on trend, not against trend. I'm going to stop sharing that. I'm going to show you one more thing here I want to show you. Let me do share screen again. If you want to know when the markets are open, this is a neat little tool that I like to go to. This is on babypips.com, and it has a clear market time zone converter. It's always set for your time. So my time Pacific is 7:38 p.m. It can show me clearly that Sydney is open, that Tokyo is open, London is going to open at around 12 a.m. tonight. And New York would be open at 5 o'clock. That's pre-market open. The actual market opens at 6:30. This will give you a clear idea in your time zone, whether you're in GMT, whether in New Zealand time, EST, whatever time zone you're on, this time zone converter will tell you which markets are open. And as we all know, the most volatile, the most volume is London market and New York market. And where they overlap, which is from 5 a.m. to 9 a.m. is where the most volatility occurs. And you can see down here, the volume, the green area is the high volume. So the high volume is pretty much all through London session. It's the highest when London overlaps New York. And then as we go to nearer the end of New York, it starts tapering off. This is Asian range. You can get some good pips in there, especially in the Forex market. But it's not as volatile, so that can be good for people who don't like volatility. But generally, you're going to make more money in the volatile markets. Obviously, Bitcoin and crypto can be traded at any time. Let's see, got a couple of messages here. Yeah, there we go. Yeah, that's it, Crystal. Babypips.com, perfect, /tools/forex-market-hours. Just a neat little tool. I have it open all the time. I mean, now I know when the markets are open, but it's very handy for me, especially when I'm traveling, Crystal. So, when you're on your missionary work, if you're doing any trading in other countries, etc. I was just recently in England, and it's a really easy way for me to catch up on when the markets are open. Exactly. Anything going on, Tony, that we need to look about on gold?
No. Well, I'm looking at it now. There's a break of structure, like with trend line I marked up on TradingView here. And it could be on a downtrend. And if it is on a downtrend, I think it probably might hit 2492, 2489. And if it does tank down all the way like super low, 2470 and 2457. But I don't see 2457 happening because that's like a massive dump. But there is a break of structure, so it just happened too, so it's fresh.
Is there imbalances down there?
Yeah, well, those are the imbalances: 2492, 25, 2489, 43, and the lower one, which is pretty low, is 2470, 39 is what I have marked up, and that's what I'm gonna go based off of.
Okay, write that down, everyone, so you can keep an eye on that. Emma, if you're trading gold, write those numbers down. Go onto the 5-minute chart, mark those imbalances up. So
Those
you
are
can,
for sales. Now, if it does
Yeah.
go, if it does reverse and go back up, I have 2,534 marked up for a buy and 2507.99, which is the other imbalance for a buy. So those are the two buys. That's what I'm looking at now. That's the only thing available to me that I can see. But as we know, as the market moves, there's more opportunities to mark up new imbalances, and we go based off of what the chart shows us. So,
okay,
yeah. But that's what I have so far. I just marked it up right now too.
perfect. So make sure you write all those down. That's where we'll be heading, is using that imbalance strategy. Now, sometimes we have imbalances. In fact, most of the time we have imbalances both on the buy side and the sell side. So that's why we need to look at the other indicators to see which direction it's heading. So obviously, if you've got them on for buys and sells, you can't take them both because it's going to go in one direction to begin with. So that's where the other indicators on impulse are going to start telling you whether you're in a buy or a sell. And so if the other indicators are saying you're in a sell, you'll be looking for those lower numbers of 2483, 2470, 2457. Okay. If they're indicating a buy, then you're looking at those higher imbalance levels. Now, that doesn't mean they're not all going to hit, but you don't want to, you want to be in and out trade sooner rather than later. So if the market's heading down, you want to be looking at the sell imbalances. Eventually, it's going to turn around and go back up for those buy imbalances, but that could be in a day, in 5 days, in 2 weeks. So that's why you need to rely on the other indicators to tell you which direction it's heading in.
Can I say something else, John? One more thing.
Go ahead.
Okay, so what I do, guys, is I'll mark up my imbalances, the numbers I gave you guys, and I'll go based off of impulse from entry. So if it's in a downtrend for a sell, then I wait for the opportunity to go into a sell. Whatever impulse is telling me when I got my indicators going, boom, I go in for a sell, and 90% of the time, or maybe even 95% of the time, it'll hit my imbalance, whether it's for a sell or a buy. But impulse tells me when to get in and when to get out, but not really for the outs, but for the ins, because this past Sunday I had marked the same thing up that I marked up right now, and I told John, look, it's gonna hit this, and that, and on Monday it hit everything. Like, It was just crazy. So it was a beautiful week.
Yeah.
And so yeah, just that's what I do. So there's imbalances, impulse, when to get in, when to get out, and that's pretty much it. Yeah.
Yeah, exactly. And Tony and I, we're often texting each other in the morning on the trading. He'll send me screenshots of TradingView, what he's marked up. We do watch this very, very closely. And as Tony says, they have a very, very high probability of success when used properly with the impulse indicators. So, we use the gold scanner called Aurus, and we use those things, but we're always using impulse for our entries.
Yeah.
It's also clear for our exits. If you add the PSARs to it, it'll give you another confirmation for your stop and reverses, and give you another confirmation of when to get out. If you're not that familiar with engulfing candles, you're not really sure whether it's just a slight pullback and it's going to continue, etc., etc. The PSARs, when you add those, can give you just another level of indication of when to get in and when to get out. And when, like Tony says, when impulse says get in for a sell, then you're looking for those sell imbalances. If impulse is saying we're going for a buy, you're looking for the buy imbalances, i.e. the ones above you. Sell ones are the ones below you. The buy ones are the ones above you. All right. Okay, if anybody has any other questions, that's the end of today's session. We pretty much covered a lot of stuff here. you know, because we're just starting this, you know, last week I started the mindset one at 10 o'clock in the morning and then 6 o'clock in the evening. This week I did 7 a.m. in the morning and 7 p.m. in the evening. I'm trying to find a good balance where we get people where it's the 7 a.m. I'm trying to get people where the day hasn't started yet, and so they still have the day available. And 7 p.m. I'm trying to hit people who the day is finished. And, you know, typically I know there's a holiday tomorrow, but typically on a Sunday, we're kind of winding down, you know, where we finished our activity. So I'm thinking 7 p.m. Is a good one to do. So I might put some questions out in the market on the chats that we have to see if anyone has other times that they'd rather me do it. If you'd rather me do it, you know, like one early on a Saturday morning and then Sunday evening. We have to do a trading one Sunday evening at some time because the markets are open Sunday evening. They're not open during the rest of the weekend. So Sunday evening is a good time to do a market one based on the actual markets, because we can actually mark them up and show you what we're looking at for trades that we're going to take today or tomorrow or later on in the week. And it's a good way to set up the week as well, get you in the trading mindset. I'm thinking 7 o'clock is a good time. If you have better ideas, let me know. 7 a.m. I'm okay because I get up early anyway, because I get up early 5 days a week to trade. So I just can't sleep in at the weekend anymore anyway. So 7 o'clock's okay for me. And then I've got my day free too. So let me know about that. Yeah, several educators do teach it. It's often not a whole lesson, so it's often buried. Vinetta, hopefully I pronounced your name correctly. But lots of the people like Mike Navarrete do teach imbalances. And again, it's one of the reasons why it's good to get on with your educators, people that you follow. I'm not inventing this stuff. You know, I'm not that smart. I'm not that clever. I just follow what works. You know, to give you an idea, I can show you. I'll just give you a quick. I'll give you a quick screen share here to show you. This is TradingView, okay? There's lots and lots of indicators out there. This is kill shot, the old kill shot. This is dynamic edge that I use. It's a little bit more advanced. It's a great indicator. It's a little advanced. You can see it's what we call chart art. There's a lot of stuff on there. I don't think it's very good for beginners. That's why I don't put people on it. But as you get more experience, it's probably the best indicator out there. There's another simple one. This was the old DeLorean that we used to do with the, remember that, Tanya? The aqua above the gray, above the blue. And this is a very simple one called red light, green light, which again is very simple. So there's lots and lots of strategies out there. The fact of the matter is, all the good strategies work. The best strategy right now, in my mind, without a doubt, is impulse, especially when you're beginning. It's a very simple thing to use. There's just two colors, blue for buy, red for sell. Simple as that. We can add other things. I like adding the PSAR. That comes from the dynamic hedge strategy. It's one thing that is in the charts on dynamic hedge, and I find that helps me greatly. Imbalances is something that we look at. We also look at support and resistance, which is a bedrock of all good trading. We'll look at those at the higher time frames. So we'll be looking at those on the daily, the 4 hour and the 1 hour to see where those support and resistance lines might be and those areas might be, so that we know that they're areas that price is going to gravitate towards when it's resistance, when it's support, and gravitate away from if it hits it. Okay, so basic trading 101. Any last minute questions? Hold on, I got 5 messages here. Maria, yeah. You trade pre-New York, Tony, yeah. New York and New York Open. And again, you know, Tony does this because he works full time. So for him, trading from 4:30 to 7 means that he can then go to work and work his full-time job as he builds up his trading account to go full-time with trading.
And then
If you
London, sometimes.
and then London in the evening. So very often with people, especially if you have kids, especially for you, Damon and Regina, I know you're real busy during the day and you're more night people, then the London time might be better for you, where you're trading later in the evening instead of early in the morning, you know, because I know you guys are busy, you've got lots of things on your plate. So the evening time might be better for you.
Perfect.
So, and what we're going to do next week on the early morning session on Sunday, which is the mindset and psychology session of trading, I'm going to be going through the trading plan. And part of the trading plan is how you're trading, when you're trading, what you're trading, etc. So we set up a trading plan that works for you around your lifestyle and your time frames, your commitments, etc. When you're better, some people are better in the evening, some people are better in the morning. Some people trade in their lunch hour during their work, and they trade 1 hour a day just in a lunch hour. So the trading plan is important. Yeah, the trading plan
During the day.
Yeah. Yeah. You're not muted, by the way, Damon. So we can
Oh,
hear you.
sorry.
Like, Damon, hear you.
No
Hey, Tony,
problem.
my wife wanted to ask if you were full-time yet. John, I'm sorry, John.
Oh yeah,
you
yeah.
full-time?
So I started. You know, as you know, I do real estate, commercial real estate. What I do now is I refer most of my stuff out to my other agents. So all my residential gets reversed out. If I have any people in your neck of the woods, for instance, I would just refer it down to you. I'm not going to do anything. I'd refer it to you guys. And so the goal is, my goal was to be full-time from August 1 of this year, and that's what I achieved. And thank you. That earlier session today, when I get the recording up, it was so important. I'm going to re-record it because I don't know what happened. It only recorded the last 11 minutes of the session. And the most important stuff was actually the first 40 minutes of the session. And anyone who's on it, I think Crystal was on it. Tony, you were on it as well, weren't you?
Yeah, I was on. It wasn't even fire what you were saying, man. It was lava. It was like
Yeah. It was such a good call. I'm going to re-record it just on my own. I'll do it much quicker that way. Won't be any questions or anything. And I'll drop that in the chat. But you definitely want to see that. If you can get on next week's early morning call to go through the trading plan, get on it. It's always the best to be on live because you can ask questions. You can see what's happening. You can see other people's questions. But if you can't, get the recording. It's the second best. Thank you, Crystal. Appreciate that. Thank you, guys. Appreciate
That was
that.
awesome. John, that was awesome. Thank you so much.
Oh, you're welcome. You're welcome. You're welcome. I appreciate it. I hope I brought value for everyone. I'm going to be doing this, every week until I run out of ideas. So get on while you can before I run out of ideas.
Hey, one
Go
more thing,
anywhere.
John.
Thank you.
One more thing with the full-time job, like for instance, guys like me, I work a full-time job and I have multiple streams of income. I do a lot of things. I buy and sell shoes, a bunch of stuff, but it's important to keep your job while trading because it makes it less stressful for you while you're trading. Because if you're depending on trading money and that's your only income, it's going to be very tough. So the more money you have coming in, the less stressful it's going to be trading, and the more successful your outcome is probably going to be.
Yeah. And we're going to do a training. One of the trainings is exactly on that. What you have to do to build up to going full-time, what you have to do to get it to part-time. And most people are looking at trading so it offers them choices. And so when you're doing it part-time and you're still doing your full-time job, it offers you certain choices. So for instance, if you suffer a health setback and it's hard for you to do what you're currently doing, you can trade in your bed, you can trade at your desk, you can trade at home. And so if you're laid up for any reason, you're recovering for any reason, you can trade. If you're traveling abroad, you know, Regina, real estate people, we can't practice real estate when we're out of town. We have to get somebody else on board to help us, and we have to either pay them to do that, or we have to offer them a cut of our commission to do it. One way or the other, when we refer it out, we lose money because we can't physically be there. If I go and I want to sell real estate in Atlanta, in all honesty, I can't do it. I don't know Atlanta. I don't know the areas. I don't know the customs. I don't know the rules. I would have to say to any client that wanted me to sell real estate to them in Atlanta, I'm not your man. I don't know enough. And I would refer them to somebody in Atlanta. So real estate is very location specific. A job mostly is location specific. You go to work at a certain location and you come back to your home from that location. You can't move unless you move your job. And so there's several stages in trading that we're going to go through. And obviously the last stage is how and when is the time to go full time. And we'll dedicate a whole session to that because it's very important to add that into your repertoire. And then you can actually set a goal of when you're going to hit that. So, but that's another session. All right. Anybody else? Going. Otherwise, we're going to close it down.
Well, thank you, John.
Oh, you're welcome. Thank you very much for everything. Thank you for being on. Thank you for, you know, I really love these sessions. I love helping people. I love asking questions. I love clarifying things because I know sometimes even when you're on with educators and you're looking at training and everything, it's nice to have someone be able there to you know, explain it a little bit clearer.
Fill in the gap.
John, when do you think you'll do that video that you did this morning? When do you think you'll post it?
Usually I would do it tomorrow, but it's Labor Day and, you know, I'm going to be drinking beers and having hot dogs and burgers. So
Sounds good.
and jumping in the pool. It's like 107 here tomorrow or something. It's ridiculous. So I might not get to it tomorrow. But again, I'm up early in the morning. So, you know, I might wake up at 6 and it'll be done by 7. So who knows? But
Okay.
I'll post it and I'll send it out. It's definitely worth the look. Definitely worth looking at, saving it. And then I will be uploading this all onto my YouTube channel as well. So I'll be getting that going as well.
Okay. That sounds good. We appreciate you, John. Thank you so very much
Thank
for
you.
doing this for us. Really.
All right,
you.
no problem. Thank you very much, guys. See you next time.